You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Well, it's Merger Monday in the junior mining sector, or perhaps I should say Acquisition Monday, as Monarch Gold has signed an intention with Yamana Gold to be acquired, at least their flagship project and a mill. The terms of the deal were announced today, and I asked my friend Brian Leni of Junior Stock Review to break this deal down. This was one of his top 3 holdings. He has revealed that this was one of his key picks in his newsletter and personal portfolio on this show and other shows. Brian is knowledgeable and really likes investing in gold companies in the Abitibi region of Quebec and Ontario. So Brian, welcome back onto the show, and could you break this deal down for us? And is it a good deal, excellent deal, or how would you weigh what just occurred with this press release today?
Sure, thanks for having me, Bill. So I guess it depends on your perspective. I think first off, in a general statement, from Yamana's point of view, I think this is a great deal for Yamana. From Monarch's point of view, I think that the acquisition price is low. But that needs more discussion because there definitely is more to it. So those that aren't familiar with Monarch, in particular Wasamac, because Wasamac is the crown jewel of this deal and of Monarch's investment thesis. So Wasamac, like you said, is located in Quebec in that Val-d'Or, Abitibi region of Quebec. Wasamac has a production profile of over 100,000 ounces per year potential. It's roughly 3 million ounces of gold, and the most important part, right now at today's gold price, has an after-tax NPV of around $1 billion. So if you break it down, and I think the important part of the deal is just to look at the cash and Yamana shares portion of the deal. And this works out to roughly 48 cents per share of Monarch. Exclude the SpinCo portion because I think it muddies the water a bit. So if you look at 48 cents, that translates into roughly $171 million. And so if you compare that to around $1 billion in NPV, Yamana's buying the Wasamac project and Camflo property and mill for roughly 20% of its intrinsic value. And to me, anyways, I would say that's at the very bottom of what would be widely thought of as an acceptable deal on Monarch's case or Monarch's position. And what I actually think this is a springboard to what possibly could be a bidding war, or at least 1 or 2 more bids coming from other senior companies. Because as you mentioned, and as I think, the Abitibi and specifically the area in Val-d'Or has tremendous history as being a great mining jurisdiction, and I think that'll continue into the future.
So we saw some other junior gold developers there in the Abitibi perform very well over the last few months, but Monarch seemed to lag. What do you attribute that to?
I think it has to do with complexity. You know, there's a lot of moving parts to Monarch's story. You know, Wasamac is a big part of it. And really, if you do the NPV calculation, really, I think all you would need to actually do is look at Wasamac. You don't even need to consider the other aspects, and you could make the case for it being undervalued. But then once you throw in the cash position and then Camflo, they've got the Beaufort mine that was producing up until just over a year ago, and probably will be another producing mine in the next year or so with the work they're doing. But you also have the Swanson project, you have Mackenzie Break. There's one more that I can't remember off the top of my head, but you have multiple other projects that, you know, in any other company in the junior space would probably be single assets, and they would be the flagship asset for that junior. But Monarch has, you know, a stable of them. And that's kind of been their moniker is, you know, they're a deal maker. They buy and sell projects, they add some value and hopefully sell them at a higher price. So to me, I would say it's more of the market not being able to recognize the value due to the complexity. It's not something or a red flag that at least I can see to do with Monarch.
And the Wasamac project, we should point out, is a feasibility stage project too. This isn't a PEA, so I was surprised at the buyout price, especially considering the direction that gold is headed. Another developer in the region, Maple Gold Mines, about a month or so ago, announced a partnership with Agnico Eagle, and since that time, their share price has tripled, up over 200%. Yet, on the announcement of this news, the shares of Monarch Gold so far, we're talking on Monday afternoon, rose about 25%, far below even the first week of August highs, where we saw it get up to about 59 cents Canadian a share. As we speak, it's about 55 cents. So what do you think the market is saying about this deal?
I have a couple thoughts. First, to do with Maple and the deal with Agnico. Agnico Eagle, in my opinion, and I think it's fairly widely held, is that Agnico Eagle is one of those premier senior companies. Their involvement in the story, and especially if that involvement is current, so they participate in a placement or they take a position within the last year, that holds a lot of water in terms of being a very good thing. And Maple in particular, I don't know the story intimately, but I know that their market cap was quite low. So for it to go 3 times, it doesn't surprise me, because you could make the case that they were undervalued to begin with. In Monarch's case, once that deal is made, you've just put a ceiling on the share price. Unless we get another bidder come in and shareholders can see that there's the real potential for a bidding war, I really think you'll see the share price hover where it is, maybe come up to 63 cents, maybe. But my guess is that we go sideways until if there's some more traction with another bidder, possibly Alamos Gold. Alamos is a 16% owner in Monarch as it is. 100% they're going to be taking a look at the deal, how it's structured, and what they think of it. And to me, from a quantitative perspective, it's quite compelling to say that there's room that you can move up there. And I think on the top side, like if everything goes in Monarch's favor, you're probably looking at a 40% value in terms of Wasamac and Camflo. But maybe that kind of thing to shoot for, which what I would like to see is maybe 30%. And that puts the closing of the deal around 320-ish million for Monarch shareholders. Plus they would get the Spinco shares, which I think is a very good thing.
Okay, I'm going to put the press release in the show notes too, if you want all the nitty-gritty explanation of this for listeners. But Brian, when you bought your Monarch Gold shares, what was the buyout price or the price per share that you had in mind? We're at 55 cents Canadian right now, but what did you envision for a sell point?
So given what the Jean-Marc Lacoste had outlined to me, what their plan was, and the valuation that I came up with personally in my model, I put a sell target or a price target of $1.20. And this is back in July, the very beginning of July, when I wrote the original article. And I just thought, considering where the market was, the catalysts that were ahead, it was my opinion that these things are going to be recognized, and things are going to start to come into place. Now, again, that kind of highlights, how much lower that actual sale price is. But again, we're basically only talking about Wasamac here, not the other components. So it's a little bit different.
If Alamos Gold and their 16% does not vote in favor of this, do you think all the retail shareholders and everybody else will send this deal forward at these prices?
That's a really good question. I think I'm not convinced either way right now. If I were to guess, I would say there's a lot of money that's just waiting to see if we get another bid, probably by the end of November. And then the decision will have to switch to how am I going to vote for this. It's a tough one to call, because we're in a really sideways downwards market right now. But for most people, I think they see the gold price going in one direction. And in that way, I could see this deal get voted down quite easily, because like I said, it is on the low end of the spectrum, no matter how you slice it. But I have to throw a caveat in there. It's easy to brush away the risks involved in developing a mine. These are complex things, and Yamana is taking on a lot of risk in putting or buying a project like this and develop it. You've got, in a general sense, you've got technical risk, you've got jurisdictional risk, you've got commodity price risk. There's a number of things that can come into play, and that's why these senior companies need to buy things at a value or at a discount to value, and why 20, 30, maybe even 40% are about as high as they get. Once you get up above a company that's selling for an NPV above that, then there's much more risk than is probably warrants an acquisition.
So in your opinion, at 55 cents Canadian per share or 41 cents US, where it's at right now as we chat, it's a good deal and your downside is pretty minimal, would you say?
Absolutely. What I would say is this, we've had it in the portfolio for a few months now, and for us, it's a hold. We want to see what's going to happen in the next few weeks and then make a better decision. But I would say for investors that are looking from the outside in my view, as I've explained, even at 60 cents per share, I see a lot of upside potential, especially once we hit that next leg of the gold bull market. So in my view, I think if you don't own the company, an entry at this position, especially, like you said, the 50 cents or 40 cents for the US investors, you get great downside protection. Plus you have some upside there in the short term if this becomes a bidding war.
And since it's at the feasibility stage, best case scenario with permitting in Quebec and everything, could it be in production in 3 years? What have you been told?
Probably best case is 3 years. It would be my guess. And then on the high end, of course, it's so hard to tell these days with COVID and all the other stuff that's involved. But yeah, I would say best case scenario, you're probably looking at 3 years for this to be in production.
And Brian, before you go, what type of advice would you leave with my listeners for Q4? We have the United States election that's upon us, tax loss selling. I mean, what do you see are the major risks and how are you navigating it?
I see the major risk is the uncertainty. And of course, tomorrow the U.S. election is a huge day, and really in the world, not just the U.S. For me, and for what I've said to subscribers, I want to wait and see what happens. I'm not one to try to predict the future. We're talking about an immensely complex thing that's going on, and things can go different ways. If it's a Trump win or a Biden win, or if either one of them wins and it's contested, I can see it unravel numerous ways. So the way that we're dealing with it is I'm saying, put in, it doesn't necessarily have to be your classic stink bid, but put a bid in that's 20 or 30% or 15 to 20% below where it's currently trading at, and see what happens. And the whole idea would be is if it does come back, we're going to buy in tranches. But if it does take off, then we're already in a great position because the portfolio has been positioned to minimize our downside risk and be ready for when that second leg continues. And so be patient. And I think don't try to get ahead of yourself and try to forecast where things are headed. Let's see where it's going.
Excellent advice. Well, Brian, thank you for giving your insights on this transaction. And to learn more about Brian's service, please head on over to juniorstockreview.com. And several emails a week I get asking about newsletter recommendations, and I would advise you to go check out Brian's newsletter if you're looking for professional guidance in the junior gold sector. Have a great day, everybody, and thanks for joining me, Brian.
Thanks for having me, Bill.
Thank you for listening to Mining Stock Education. Please subscribe and share this show with like-minded investors. Connect with us at MiningStockEducation.com and sign up for our email list to stay in touch. Much success to you as you learn about, invest in, and profit from mining stocks.